Hi. Let's learn about low exercise price options, LEPOs. A low exercise price option is a European-style call option with an exercise price of 1 cent, which mimics a futures contract. Both the buyer and seller operate on margin, and it is almost certain that the holder will exercise the option at maturity. LEPOs originated in Switzerland to avoid paying stamp duties on stock trading. Since the strike price is so close to zero, the investor purchasing the LEPO gains most of the features of owning the share directly, with the exceptions of dividends and voting rights. The Australian Stock Exchange began listing LEPO options in 1995 and offers them on nearly 100 ASX-listed companies as of July 2021. LEPOs differ from regular or standard options in several key ways. Conceptually, LEPOs also act as forward contracts or futures. Standard options give the holder the right but not the obligation to purchase the underlying security at or before expiration. However, since the strike price is so low, the odds that the option will expire in the money, and therefore automatically exercise at the expiration date, are a near certainty. Essentially, a LEPO is a futures contract with the obligation to take delivery. All options and futures may be sold to close out the position and avoid taking delivery of the underlying. Since LEPOs function as deep-in-the-money options similar to the stock itself, they have a very high delta value and trade similarly to the underlying stock. Because these options are of the European style, meaning they are only able to be exercised at expiration, their near-zero strike price almost guarantees that the holder will take delivery of shares at that time. The advantage over owning the stock outright is the participation in the performance of the underlying without any financial or legal issues caused by the direct holding of the stock. However, deep-in-the-money options have very high premiums, or initial costs. The investor holds LEPOs on margin, resulting in a lower upfront cost. The benefits must be weighed against the disadvantages of having no claim on dividends or the ability to vote the shares. Here are 4 key takeaways. 1. A low exercise price option, LEPO, is a European-style call option with an exercise price of 1 cent that mimics a futures contract. 2. LEPOs function as deep-in-the-money options similar to the stock itself. 3. Both buyer and seller of a LEPO operate on margin. 4. LEPO options are not available on any U.S. exchanges. Hope this would help. Thanks for watching.